What is going on, everybody? Welcome to this short little video on the VIX. Now, what is the VIX? How do I use it? Why are these numbers on my chart? All questions I will be answering very shortly here. So if you have the bias roundup and you go to pages number 3 and number 10, we'll start on number 10 or number 3 here. You'll see that the VIX is below 20, 61% chance of the new day opening gap having the correct bias. Now, we are in fact below 20, and on the daily chart today, we are in fact having a bullish day, right? That is it gave you the correct bias today, right? So there are multiple ways to use this, right? The lower it is, the higher probability. Period, end of story. If you're above 30, you're not trading, right? That's just some simple facts. You can ask any legitimate futures trader. They don't trade when this sucker's above 30. And we'll get into why shortly here in a second. Now, what actually is it? It's fear and greed on a chart, right? The higher this is, the more fear there is, the more selling there is, the more worrisome the price action looks and becomes, right? So you may notice this day here, we had a spike up in fear and volatility, Friday, November 7th, right? Now, if we actually go to Friday, November 7th in our charts on an intraday chart, we had big selling off, right, down 2.5% almost, just from London highs, right? Then we rallied up from here, up back to pretty much where we opened at 6. Yeah, so that literally shows you, if we drop down to a 15-minute chart on the VIX here, on Friday, we're climbing, same time as when we're dropping in the NASDAQ, right? Then, right around 12, boom, we reverse at 12, the VIX falls off and then closes, right? It's no coincidence that this chart here can actually predict reversal points for the NASDAQ. Now, that's a whole different story. It's going to take me a long time to talk about that. But anyways, the whole moral of the story is that keep this on your daily chart. You can mark key levels on this and see if NQ actually if VIX hits it and respects it and NQ can follow suit. There's a whole thing there that you can dive into. So let's do a small back test of this, okay? So we have on our chart here, we have April 4th, 5th, 6th, 7th, 6, 7, all these days here, right? So if we go back to those days on this chart here, we go to April 4th on Friday, and we'll see, I already have something drawn up here. You'll see that this tiny little stop loss is 180 points. How are you meant to trade this? Right, your take profit's 1,000 points. This looks like regular price action, right? Unless you're trading the micros, then this is an untradeable market, right? Which is why I tell people, and more traders tell people, to not trade when the VIX is above 30, right? So even here, you fall off. Just this price action here is 1,200 points. If you wanted the stop loss entering here, you have to risk 270 points. It's rather challenging to trade, rather challenging. Imagine you're not paying attention to the VIX and you enter a short and you're like, oh, I'm going to go set my stop. And then you're risking 10 times what you should be or 5 times what you should be. And you're like, oh, fuck. You know, it's like accidentally buying a mini instead of a micro. Like, I know some of you have gone through that. So keeping track of what happens in the VIX is really, really important. So this is a shorter video, just breaking down what you can do and what you can use it for. I hope you found value in this. I got nothing else to say, really. Take it easy.